Okay, let's unpack this. You're looking for a swift, insightful overview of Bitcoin's market right now. Yeah. And for a deep dive today, we're going to cut through the latest analysis for August 2025. Our mission is simple. Just extract the most crucial nuggets of knowledge, giving you a really crystal clear snapshot of exactly where things stand. So as of August 8th, 2025, Bitcoin is, well, it's in a noticeable consolidation phase. It's trading in a fairly tight range between $115,000 and $117,000.
Right.
And this follows that pretty strong rally we saw, right? Peak near $123,400 back in July. It feels like the market's just kind of taking a breath.
Yeah, exactly. And what's truly insightful here is the nuanced shift in market sentiment. The fear and greed index, which is our barometer for market emotion, has dipped. It went from greed back to neutral.
Okay. Is that bad?
Not necessarily, no. It's actually probably a sign of healthy consolidation after that intense bullish surge we had. More importantly, this current tight consolidation, it seems underpinned by robust institutional flows.
So the big players are still involved.
Definitely. They aren't just holding, seems like they're actively accumulating. So analysts are now keenly watching, for a potential breakout. Could go either way as volatility compresses.
So if we zoom in a bit.
Yeah.
What are the specific price levels that truly matter for you right now? Like, where are the actual battle lines drawn?
Yeah, good question. If we connect this to the bigger picture, identifying these key support and resistance zones is vital, really vital for understanding potential future moves. So on the downside, we have a strong support zone. Think between $109,000 and $111,000.
Okay, 109 to 111.
Right. And this area, interestingly, was prior resistance. It's flipped now to become a key demand zone.
A demand zone, so where buyers tend to step in.
Exactly. A favored area for accumulation where larger buyers often show up. Now, for more immediate sort of tactical moves, $114,000 is acting as near-term support. History shows dips into that, say, $114,000 to $115,000 range. They've consistently attracted buyers.
I see. So potential tactical entry points there. That makes sense. Now, let's flip it. Let's look at the upside at resistance. Immediate upside resistance seems to sit between $115,800 and $117,000.
Correct. That's often where momentum starts to slow down and you see some profit-taking kick in.
Right. But what happens if we manage to push past that level?
Well, beyond that, $120,000 stands out. It's a significant psychological barrier.
That big round number effect.
Precisely. Traders often pause there, reevaluate. It can lead to increased selling or sometimes a strong defense from buyers. But the major resistance is still July's high, that $123,400 mark.
Right.
Getting a sustained close above that figure, that's absolutely crucial for signaling the next leg higher. These higher levels, particularly $120,000 up to $123,400, they're seen as key sell zones, places to take profits or maybe even initiate tactical shorts like betting on a price decline if the market really struggles to sustain a breakout.
Okay, so that brings us neatly to strategy. What should your approach be in this kind of, consolidating market?
Yeah, that's the important question, isn't it? What should your strategy be? It's probably worth noting that August, historically, is often a month for corrections or just range-bound trading in crypto. It's a seasonal tendency. So given that context, dips into that $109,000 to $111,000 support range, they offer pretty solid risk-reward entries that applies for both swing traders, looking for short to medium-term moves, and also for long-term holders looking to add to positions. But for any serious attempt to push higher, towards $123,000 and beyond, we really need to see sustained closes above that $117,000 to $120,000 band first.
Got it. And for your risk management, the analysis seems quite clear there too. If you're scaling into positions, maybe consider placing stop losses below $109,000.
That's sensible, yeah. Protects your downside.
And conversely, if Bitcoin does push higher, think about taking some profits off the table. Maybe in that $117,000 to $123,000 band, especially since volatility might pick up as it nears those key resistance points.
Exactly. Managing risk is key in these conditions. So the overall outlook, it really points to continued tight range-bound trading, at least for the immediate future. A breakdown below that crucial $109,000 level, well, that would open the door for deeper pullbacks. We could potentially see $107,505. On the other hand, a convincing breakout above $120,000 would be a strong signal. It suggests the uptrend is resuming.
Okay. So bringing all these points together, What's the sort of ultimate takeaway for you, the listeners? You observe the market. Maybe consider this provocative thought. In this environment of consolidating volatility, how do these specific price points we've discussed, how do they not just mark potential trading opportunities, but also reflect that ongoing battle? The tension between growing institutional confidence and those inherent market jitters. How is that whole dynamic truly shaping the narrative for Bitcoin broader acceptance and maybe its future role in the global financial landscape? Something to think about.